This deceptively simple pattern I'm going to show you could absolutely rock the markets in the coming days. How did we rally 11 points overnight, and could it have been expected? Remember how I said in my last video that the market is bearish only so long as it remains in these descending channels? Well, someone changed the channel. We finally got a breakout of this descending channel and the corresponding rally. We're going to go over what I believe is going on and what were the key catalysts. Things started with Microsoft's earnings. They barely met earnings expectations, and this market has been punishing any company that doesn't absolutely beat expectations. So it initially sold off in after hours, broke below this descending channel, and it actually dropped over 36 points. Then it clawed its way all the way back up into the channel as they gave good forward guidance. I truly believe this is evidence the market is just going up on promises and fumes alone. They're essentially saying, we're not making any money on the billions of dollars in capex we're throwing into AI right now, and probably won't for years, but we're all going to be rich together soon. Trust me, bro. And then there's also warnings like this. And I really appreciate their honesty, because there's a lot of places right now, analysts that are saying, oh, the market's going to go up, up, up. And this one's actually saying, no, there actually isn't a bunch of cash on the sidelines. On the daily time frame, we came down and we tested this Ichimoku cloud support. Again, if you're interested in how to actually use the Ichimoku cloud, please leave a comment below and I can actually make a video specific to that. Then we had Japan unexpectedly raise interest rates by 15 basis points at 12 a.m. I suspect they realized they couldn't keep up this currency intervention for much longer, so raising rates was the next logical step. Of course, that will further unwind the yen carry trade. Looking at the Dixie, the dollar strength index on the 5-minute time frame, you can see right here, right at 12 o'clock, when Japan raised their interest rates, it sparked this beginning of this downtrend. The Japanese yen is part of Dixie, and whenever other currencies strengthen, it weakens the dollar, which is typically bullish for equities or stocks. For now, we're still holding above this main support line. You've got this symmetrical triangle pattern on the daily time frame for the Dixie, which is actually currently targeting around 98.80 to the downside, or if this support holds, it could actually still be targeting around 110 to the upside. But like I pointed out before, this inverted head and shoulders pattern looks like a failed breakout now. We also had European CPI also come out around 5 a.m., 0.1% higher than expected, which definitely wasn't bullish for the dollar since the euro is also part of the dollar strength index. And higher inflation expectations decreased the likelihood of a eurozone interest rate cut. And to make a point, I want to quickly revisit the symmetrical triangle pattern that I covered in a previous video. Remember how I said if it had broken to the upside, the target was around 551 to the upside, or it was targeting down here to the downside around 540. But remember what I said, patterns can sometimes morph and pattern targets move along. So once we got this bottoming out here, look at what happened here. When you drag this measured move over here, we went from here up to here, and notice how this hit perfectly and then started its sell-off. So keeping that in mind, you remember this falling wedge pattern that was targeting about a 14-point move to the upside? When we drag this pattern target over and we go from where this double bottomed, look at where this is targeting. If that pattern turns out to be legitimate and we simply had to just double bottom before it finally broke out, the pattern target has already been met, and there's no guarantee from here that it will continue higher. However, when we look at the S&P 500 futures, SPX, and SPY, price closed above this lower support line of this massive rising wedge pattern on all three. So long as this line acts as support, which so far it appears to be doing, the market can remain bullish. You know what they say, there ain't no party like a bull party. However, as I've mentioned before, breaking back up into this pattern does not invalidate it. The only thing that can invalidate it is if we break convincingly above this upper resistance line and flip it into support. Notice how before we got above it and then we rejected down very sharply, we would have to get back above it, treat it as support, and then keep rallying from there to completely invalidate it. And don't forget from a previous video, if we zoom out even further, we still have this big cup and handle pattern that's still targeting around 577, give or take, maybe 580 for the overall market, we could still fulfill that pattern target and then sell off. So were there other things that could have tipped us off to this big move on SPY? Remember this big rising wedge pattern that we covered on the VIX? It's still targeting down around 13 and was indicating a likely compression in volatility for days before it actually happened. It took multiple days to finally continue breaking down, mainly because it was failing to break below this previous ascending channel support. Now we're below this, so let's see if we continue further down. Just keep in mind that there are different support levels all the way down. If you think the VIX is making volatility great again, please smash that like button. Knowing how close Nvidia was to this lower support line of this descending channel that we've been covering, plus being extremely oversold, it made sense technically that it would rally. However, the exuberance with which this whole market rallied seems more reminiscent to me of a short squeeze rather than a true bullish reversal. I mean, this thing came up over 20 points and has barely seen any pullback. Apparently, so far, the market likes what it saw and heard with Meta's earnings, so it's broken out of this descending channel, and it kind of even looks like it's broken back up into this much wider, much longer term ascending channel. If it has, this is very, very bullish for Meta. And if we take a look at Tesla, Amazon, Apple, and Google, these are all convincingly above their descending channels. It's hard to be bearish, at least short term, whenever you see this much bullishness in the markets, but let's get into that pattern I mentioned at the beginning of the video. But before we do, please remember to tap that subscribe and notification bell if you're loving these videos and want more. Also, don't forget to leave a comment below with the ticker of your choice so I can perform analysis on it from the next video. So right now we're looking at the ADD, the New York Stock Exchange Advancing Declining Difference. You see how all of these falling wedge patterns and little rising wedge patterns, all of these patterns on this chart played out perfectly before. Just like all of the other patterns I've shown you played out virtually every time, imagine what's going to happen if this big rising wedge pattern, this multi-day rising wedge pattern actually plays out and the entire market drops off at the same time. The ADD is a bit more difficult to time since it doesn't show extended hours trading. Right now, it's indicating that the overall market could continue up higher, but once it hits this upper resistance line and rejects, I anticipate a very sizable correction to hit the markets. I wouldn't be surprised if that occurred around the same time as the pattern target on the VIX was met, placing it near a support level. Be bullish or bearish based on what you're seeing, but please be aware that this is a possibility. And don't forget all of the other earnings and economic catalysts that are coming out. And just taking a really quick look at TLT, the 20+ year bond fund on the weekly time frame, it looks like bonds are already signaling soon to be rate cuts. It's already broken out of this descending channel, and if we zoom out, you can see pretty clearly this inverted head and shoulders pattern on the RSI. The bond market could be anticipating rate cuts for something other than a soft landing. As always, nothing I show is financial advice, and without further ado, here is today's trading rule to live by. Best of luck, cool cats.